afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Indian markets continue to trade with a negative bias on the weekly options expiry day. The Nifty trades around the 11,850 mark. Broader markets and banking stocks underperform. Indiabulls Housing Finance is the top gainer on Nifty after the Writ petition against the company was withdrawn. Yes Bank and Indocin Bank are the top losers on the Nifty after UBS downgraded the stocks and cut its price targets as well. Jet Airways trades with cuts of close to 20% after NSE will remove the stock from its daily trading list from June 28th. It'll be moved to the trade for trade segment. And Adani's Carmichael Mines gets its final approval from the Queensland government, which has cleared its groundwater management plan. The stock, though, is trading with cuts today. Good afternoon, Neeraj. Second straight day of losses, but I guess there's some buying which has definitely emerged as the markets are off the day's low right now.
Yeah, you got to take heart from the fact that we're just about 0.25% down and not more. But and we're trading in or around. Well, maybe the second highest point of the day, if not the highest point of the day, but yeah, around those levels. The broader end of the spectrum should also come up on your screen, even though the bank nifties look slightly wobbly. The broader end of the spectrum has not crumbled too much in trade. There's some positive news flows around certain companies which would have probably improved the broader market sentiment as well. So good going on that front. Not terrible going. The market breadth, though, worse off than yesterday. This is similar to what we've seen some parts of last week, wherein while the indices may have done what they have done, the market breadth was much more adverse. And in today's session too, that is looking right now. But let's see if this improves, because certainly from the levels that it was at, it's a bit of improvement that we've seen at the market breadth too. But negative for almost the entire trading day today. No crisscrossing of the lines. Bring up the heat map and well, opposite ends of the spectrum. So out here, Yes Bank and Indocin Bank, primarily I presume due to the downgrades, but due to all the news flow surrounding Yes Bank individually too, that stock is down 10%, Indocin Bank about 5%. The UBS note has a big role to play here. We'll be talking about that in a moment on the show. Vedanta, ONGC are amongst the other companies. I think oil and gas by and large has come under a bit of a stick. Reliance too is down about 1%. What's done well? After the clarifications, Indiabulls Housing Finance up 9%, quite bizarre, I must add, and we'll be talking about it to the Indiabulls management and to Jain Gupta as well to try and figure out, I mean, what the hell is happening? How is it that NBFCs are getting clobbered on the basis of a couple of rumors which get nullified a couple of days later? The kind of investor loss is quite staggering. Z Entertainment up about 2.5%, in or around the highest point of the day. And while oil has spiked back, BPCL is not showing any nervousness, still up about 1.7%. Bringing out the mid-cap end of the spectrum, maybe some of the Indiabulls Group companies might be doing well at the broader end of the spectrum as well. Should get up the MRR function on the screen and show you what's happening there. Indiabulls Ventures bounces back about 11.5%. Some strength for PI Industries, Bharat Electronics, JSW Energy and Quest Corp bounces back a little after getting clobbered the last few days. What's not done well, Diwan Housing loses out almost all the gains of the last 3 days. Reliance Power up down about 7%, and PNB and Sterlite Technologies give up some of the gains as well. What about the small cap end of the spectrum? Let's see what's happening there. Indiabulls Real Estate, again, the top gainer. So after 2 days of being the top losers, the Indiabulls Group is the top gainer in the session today. Some strength for India Cements. They spoke to us yesterday, sounded very confident. Ujjivan about 1.5% higher. What's not doing well? ADAG continues to grind lower. So Arcom is down on the 2.5%. And Jet Airways is the big one. There's just so many casualties these days, it becomes difficult to figure out which one is arguably the stock of the day. I would presume that Jet Airways would probably take the mantle on the downside with the Indiabulls Group on the upside. How is the derivative space though looking like, Navneet?
Well, Neeraj, today is the day for the weekly options expiry, and you can expect a bit of volatility, and that we've already seen. There is a recovery which has come by in the last 10 to 15 minutes of trade. Nifty clearly defended the 11,800 mark in today's trading session, but no major build-up has come about when it comes to the futures, and it's just not for the day. That's been the trend in the last 3 to 4 trading sessions, that there's no major position petition being built up on Nifty futures, or for that matter, even Bank Nifty. Pull up that one. That too has recovered from the lows of the day, but it's still sitting with cuts of about 80 points, probably weighed lower due to the cuts that one has seen for Indocin Bank as well as Yes Bank. India VIX volatility has been lower in the recent past, and now actually it's slipped below the mark of 14. So 2.5% lower for India Volatility Index. Remember, when the VIX is lower, it gives some bit of comfort to traders to create long positions at lower levels. Probably that would have played out in today's session as well. In terms of the options data, there was a lot of call riding, which was visible around the mark of 11,850 as well as the 11,900 level, and that's there on your screen as well. On the put side, major addition today was seen for the 11,750 and the 11,800 strike, and clearly 800 has been defended in today's session. In fact, as we speak, we're inching very closer to the mark of 11,900. For this weekly expiry, the range was 200 points between 800 to about 12,000. Quickly, I want to highlight a few stocks, see it, where a lot of OI buildup has come about in today's trading session. The stock too touched its 52-week low, clearly indicating that there are short positions being built up here. On YTD basis, it is an underperformer. The stock's down nearly 29%. Indiabulls Housing, intraday recovery of the stock has been nearly 13% after that news came about that the petitioner has withdrawn the writ petition which was filed against the promoters. This counter was seeing short positions in the last two trading sessions, so the sharp bounce that you saw could also be on account of short covering, though as of now net you can definitely see open interest moving higher by about 10%. And the private banking counters, Yes Bank and Indocin Bank, both have witnessing some bit of short positions after UBS downgraded Yes Bank and also cut the target price of Yes Bank sharply to about 90 rupees. And the last one I want to address is Motherson Sumi, a counter which has been moving higher in the last few sessions. In fact, for the week, I guess it's up about 9%. So it's rebounded quite sharply from the lows that one had seen last week of about 112 or 111. Yesterday, it was a short covering move, and today it's indicating some bit of fresh long positions being built up here, Neeraj.
Okay, let's get in an expert on the show. Ajay Bagga, Executive Chairman of OPC Asset Solutions, joins us right now. Ajay, good having you. Thanks much for joining in. I want to start off with a small issue on which we'll be talking to Mr. Jain Gupta a bit later on as well. Indiabulls should be joining us any moment too. But Ajay, this whole measure of rumors dragging down not just small cap names but Nifty 50 names by 5, 10, 15% over 2-3 sessions, and then the rumor goes away or some clarification comes in and things get restored or attempt to restore the things back to normalcy. It's becoming too frequent now for anybody's comfort.
Yeah, absolutely. And I would say the way the courts have started fining even public interest litigants who are doing frivolous litigations, I think this kind of litigation must be fined, and the government should also launch a full probe into who are, like the company has said, there are bigger masterminds behind this. So who were these guys who are, getting small-time shareholders to file right up to the Supreme Court? I think it's a very worrisome development. It will be good if the government makes an example of such petitioners, and some kind of a precedent is set by the Supreme Court that frivolous litigations like this would lead to penalizing of the litigants also in case it turns out to be frivolous. So I think it has hurt the market. We saw very sharp erosion of sentiments overall across the sector, not only for the concerned company. So worrisome, yes, Neeraj.
Ajay, just wondering, do you think the confidence crisis within this pocket will take a really long time to heal? I was speaking to Sudhin Choksi of Grow Finance today, and he believed that any kind of positivity in the real estate sector, for example, due to crunches of or due to various reasons, will only happen in October. If that is to be the case, then the clutch of NBFCs which are vulnerable due to real estate LAP financing will keep the sector on tenterhooks, I presume.
Yeah, I think so. And I think the policy being formed by the government, I have spoken to quite a few people, and there seems to be no urgency. In fact, there's a counter question of, oh, so you want public money to be thrown after private losses. That's the kind of sentiment that I'm getting. Even people who went for budget discussions, and I polled them on what is the sentiment like. There seems to be a policy of drift. Here, the government is not keen to step in very fast into the NBFC crisis. There is some amount of negation of the seriousness. And real estate, if you look today, the report was out saying 12 lakh unfinished or unsold units. Last week we had a report which said 7 lakh flats which are completed and lying unsold right now. Those are huge numbers, Neeraj. 3 lakh odd crores would be the valuation, which would be the money stuck. Then you look at NBFC exposure of banks, that's another 6 lakh crores, which has got lent into this 3 lakh, building up this inventory. So somewhere somebody has to step in, open the taps of liquidity and help both the real estate and the NBFC sector, and concomitantly with it the auto. Auto is also suffering. Yesterday we had the statement from one of the auto majors saying that nearly 1/5 of its sales are down because of funding not being there for commercial vehicles. I think that's what's hurting the two-wheelers also, apart from the BS6 and all those moves. So people are postponing purchases of the old vehicles, waiting for the new vehicles. That's a big issue, but liquidity is the fundamental issue. Out here we have had 75 basis points of rate cuts in the economy. That's not got transmitted down because the liquidity has been held very short. The government is borrowing huge amounts. We saw the April number of government borrowings was nearly 1,70,000 crores against an annual number of 7 lakh crores. So they are front loading the borrowing, which is really leading to liquidity evaporating. And for this sector, NBFC, first order impact on NBFC, second order on real estate and auto straight away, third order on all the industries which are suppliers into these two very critical functions. Auto, for example, is nearly 40% of your manufacturing GDP is accounted for by auto. If you take construction and real estate, those are the biggest employers in the economy. So these are not small sectors which are getting hurt, but I'm only seeing a policy of drift. So yes, a short answer, this will continue, the trouble will continue.
Point taken, Ajay. The knock-on impact because of liquidity crisis has been felt in spaces like realty as well as auto. In fact, today, Business Today reported unsold houses are at all-time high of 12.76 lakhs in India in the top 30 cities. I think you were talking about that report as well. But what sort of measures, Ajay, do you expect from the government now to come in the union budget, which is scheduled for next month, to help this space?
Yeah, it's it's a very difficult question, but I would just talk probabilities, Navneet, and I think the biggest probability is welfareism continues, agricultural, rural kind of work, the redistributive justice kind of work will continue. There will be a lot of lip service to infrastructure, to revival of private capex, but that needs a huge fiscal stimulus. One, fiscal space is not there. Second, the feeling that I'm getting in my talks to knowledgeable circles is that the government thinks it's not that big a crisis, that a 2008 kind of fiscal stimulus should be brought in. And now, it's no longer an excise duty cut, what a Pranab Mukherjee or a Chidambaram could do in 2008 and cut down auto excise duty and kickstart the economy. It's not that easy. It's a GST council which takes a lot of work to get any changes done. But if I was given a choice, I would say cut down GST on autos, help the auto guys to work out that inventory. If needed, postpone the BS6 and help them to get rid of this inventory first. Second, have a fruitful policy. Anybody and everybody who's got anything to say comes out and puts a date for electrical vehicles. It's not something that can be done overnight. People have plants, people have lines running. You can't just shut down an engine line and say by tomorrow you will start electric vehicles. I think we need a 10-year, 15-year policy to be brought in, and with a commitment to the industry that now things will not change. Real estate, construction, crying need for funds, crying need for generating demand, which will only come if you pump in money into the economy, and secondly, if you give some relief to these sectors, make the NBFCs able to lend them, some kind of a relief has to be brought in.
Okay.
So I think I'm
Ajay,
not very sanguine on the budget.
Ajay,
Yes, Niraj.
Ajay, stay on. Ajay, you might want to hear this conversation as well, because you're talking about this, because Indiabulls Housing Finance, which has informed the exchanges about the writ petition filed against Sameer Gehlot being withdrawn. To talk about that matter in greater detail is the company's executive director, Ajit Mittal. Mr. Mittal, good having you. Thanks much for joining in. Well, you must be heaving a sigh of relief, but this is not the end of it, right? You've spoken in the past about how there are larger forces at play. Surely you're getting the government, SEBI, etc. involved into this.
Yeah, if you remember, I was there on your channel and also a couple of other channels. This is precisely what I said. See, society and the government as a whole have to collectively ponder as to these kind of sensational, conspiratorial, extortionate rackets by the professional crooks that are going on and who are holding this, corporate world to the ransom. There has to be a firm mechanism to deal with this. So this is what a broader issue is. As far as we are concerned, right from the word go, we were fully assured that this is all rubbish. There's not an iota of truth in it, and even a layman who had a slightest understanding about financial matters can understand that this is all, replete with nonsensical stuff. So we didn't have any worry whatsoever on that account. Eventually, the truth has to prevail, and the government agencies, the regulators, or whatever, they go by objective facts. They don't go by sensational charges. So our business is completely above board. We are operating strictly within the four walls of the regulatory framework. So there was nothing for us to get carried away or get worried. But essentially, it's the investors' wealth that was getting destroyed, which is what really got us worried. Fortunately, good sense prevailed on these guys. They realized that they were being used as a pawn in this kind of conspiracy, and they themselves came around and filed the affidavit and withdrew it. Now the law will take its own course.
You're saying this happened because the petitioner himself came out of his own free will, or did the company have to make him see reason? What was?
On the contrary, if you remember, company approached the Honorable Supreme Court yesterday, requesting the court to expedite hearing, rather take it up on a priority, this petition, because we knew that there is absolutely no merit in this petition whatsoever. So we never approached those guys, and this guy was anyway not, traceable or whatever. The other guy is already in police custody. So there's no question of our approaching or trying to coax or cajoling them into withdrawing. They themselves realize that their game is up, but the actual mastermind behind this is still there. Eventually the law will catch up with him, and he'll also be dealt with in accordance with the law.
Mr. Mittal, any idea who is behind all of this? Because looking at the press release, what the petitioner, you guys have quoted the petitioner saying that he purchased 4 shares of Indiabulls in May.
These are facts. These are facts. But was available. He bought 4 shares, and not he. In fact, he's a milk seller. He doesn't even have understanding about this methodical, very sophisticated, this web of intrigue that they wove. He has no knowledge about it. So 4 shares won. The other guy bought 2 shares, just about a month back. This guy bought it a couple of weeks back. The idea was to give them the legitimacy of a whistleblower, so that he can raise all the muck against the company and just get, shelter as a whistleblower. That was the whole game plan, and make all kind of wild allegations, the wildest possible. So I don't know why even media had to give so much credence to these rumors, baseless, scandalous allegations.
Right.
Mr. Mittal, I think just to answer that question, well, we did put up your side of the story on the site as well, but because the stock prices were correcting, I don't think business media had a choice but to at least point out what the reasons could be why this would be happening.
I understand the compulsions of your profession, so that's okay. You have to give both sides of the story.
Yeah, that's it.
And I really appreciate that you at least allow us to, put across our facts.
No, not at all.
So, Mr. Mittal, now that you're saying it's clear that Abhay Yadav was just being the face of it, but just want to check, has the group tried to find out who's the bigger face behind it now? Who's been coaxing these people to file the petition?
Yeah, I told you a couple of days back as well, and I still maintain that the actual mastermind is somebody else. It won't be fair on my part to name it here, but it's well known who it is. So eventually he'll be exposed. And in fact, in the circles, it's already known who is the guy. He masquerades as a sort of lawyer, public interest lawyer or whatever it is. So he was the brain behind these petitions. These guys were used just as a sort of guinea pigs, and now these guys realize their folly. They got into the trap, and they are themselves sort of realizing that they are up against wall. We didn't surrender to the blackmail. The easiest thing for us would have been to enter into some kind of understanding with those guys when they approached us. But our ethical belief system, our value system doesn't allow us to resort to these kind of things. So we rather chose to bite the bullet and take them on.
Okay. Mr. Mittal, all the best. Thanks so much for joining with this clarity.
Thank you. Appreciate it.
Okay. Well, as the management stated in the opening answer, they're hoping that there would be wider ramifications and there will be some more checks into this. We'll get in one more voice out here, but it just brings home the point. These days, I think Professor Sanjay Bakshi was on Twitter as well, putting out a hypothetical story about how easy it's become to get a stock to get dislodged and make money in the intermediate period at the loss of a lot of these retail shareholders as well. Indiabulls Housing Finance on the last 2 or 3 sessions has just completely collapsed, and then today bouncing back. Just a quick perspective from Mr. Jain Gupta, and of course we'll get in Mr. Ajay Bagga in this conversation as well. But Mr. Jain Gupta is the former ED, SEBI, and founder and managing director of the Stakeholders Empowerment Services. Mr. Gupta, does this worry you? I think more than one prominent investors on social media and enough and more people on actual media coming out and talking about the worrisome behavior wherein a spreading of a rumor at times, in the case of Indiabulls, something more, and then the stock prices plummeting the way they are, only to get proven wrong 2 or 3 or 4 days later.
See, I tell you, it is a very worrisome thing, and such attitude or such actions on part of few individuals puts the entire system of whistleblowing into disrepute. Because the confidence of the system in the whistleblower process gets shaken. And on the other hand, this is a typical case of unfair trade practice, and it needs to be investigated and taken to the logical conclusion. Because if I have seen whatever I have seen in Indiabulls disclosure, it says that the gentleman who filed the case was not aware of anything. Somebody had forced him to sign it. Now, who was that somebody who forced him to sign it? Because it can't be that the person said that he met the person in a train and he signed it and went away. That could not be the case, because when he has filed the case in Supreme Court, so he would have known the person. Now, SEBI and all other investigative agency needs to get into action and go to the logical conclusion and give exemplary punishment to the person, regardless of the person, whether the person was aware or not. It is not to be important, because this could have caused, and this may have caused, lot of losses to people. And people could have benefited. The person who would have known that this is a false case would have benefited by short selling and whatever is possible. So the issue is very clear, two-pronged. One, it needs to be investigated and taken to the logical conclusion as soon as possible. Second, one has to really get into a system, and I have no clue how the system can be implemented to filter out some such complaints. Because if a stock market can be held ransom to somebody's false complaint and it's false and it goes up, then the entire credibility goes.
Yeah, that I agree. Mr. Gupta, so this is a bit of a new twist, but otherwise on rumors nowadays, there's a lot of stocks are collapsing as well. What do you reckon SEBI can do? I know you mentioned that it's difficult to figure out what can happen in a case of a case being filed and then later withdrawn. But anything, I mean, what do you think, if you were in the position to do it, what do you think your reaction would be to a scenario like this? Would it stop at fining the petitioner and trying to dig more? Would it stop at that? Is that the only thing that can be done?
No. See, there are two issues. One, as I have already told, it is one individual case which you can go to logical conclusion. Then it is an issue of system. Because then I very clearly said that this shakes the foundation of the whistleblower system. Now, what SEBI can do, again, as I have been repeating all the time, the SEBI cannot be in a position of God who knows what is happening everywhere. At the most, SEBI can start monitoring on the social media, which they are doing. They can do the warehousing and they can start taking action. But again, the problem is that SEBI has limited capability, limited staff strength and limited bandwidth. So it cannot be taking care of each and every possible complaint, each and every possible whistleblower, and that too in a situation like where I get into whistleblowing mechanism because I have to blackmail you or something like that. So it is a case where all investigative agency and Indiabulls should do its duty in filing the cases at appropriate places for fraud and for all cheating and all blackmailing, and let us see what happens. But this case needs to be investigated as soon as possible and deliver judgment as soon as possible. It should not hang for 15 years or 20 years as we have habit of dragging the cases too long.
Okay, Mr. Gupta, appreciate that. Thank you so much, though, sir, for taking the time out and being with us today. Well, that's the view from Mr. Jain Gupta. Just, let's get in final thoughts from Ajay. Bagga. He's been patient with us, but I kept him on because I would want him to hear the response from both Mr. Jain Gupta as well as the Indiabulls management to Indiabulls Housing, that is up about 9% in trade. Ajay, the other, at least one final question from my end would be, the last few days have again shown the stark move towards what's perceived to be safe and secure. So the Bajaj Finances, Kotak Mahindra banks, HDFC banks are doing well. Indocin Bank, Yes Bank, etc. are not doing well. The UBS downgrade, of course, adding to the woes of both of those. Do you think that difference will only get starker as the news flows around us suggest so?
Yeah, it is a tough time, Neeraj, and valuations are not at low levels. 3 times book, you're not cheap at all on a global basis, and if fundamentals get eroded, then you would see selling like this. So UBS report is just pointing out the obvious. But for Yes Bank, it's a capital adequacy given the kind of exposures that are there, and now you can only hope that with somebody with such a good reputation as Mr. Gill at the helm, he will get some PE funds or some QIP done quickly to shore up the capital adequacy. For Indocin, I think Mr. Sopti has handled a lot of these issues already, but post the last results, there have been more flow-throughs that are now coming up. The good part is DHFL has shored up liquidity, at least for the time being. It has repaid most of the outstandings. The negative is the ADAG group, so those have to be addressed by all the banks which have exposures. And the ongoing issue is the real estate LAP exposures that you spoke about at the beginning of this program. I think the loans against property exposures will come home to roost unless we are able to create a liquidity window, because that just goes into seizure then. If there is nobody stepping in to take over those loans, and those are longer term loans like infra. So we are looking at a 2011-12 kind of a situation, Neeraj. If you don't have liquidity, you can seize up a lot of the sectors. That is the big trouble. I don't know if we'll get something from the government, or we'll just have to, focus on the individual players getting in and doing something like DHFL has done, or today Indiabulls has come out and been able to get this petition scotched either ways. I think that is positive for the markets. We need to build up the confidence, but right now I would say low on confidence, stick with the quality. 1 year basis, I am still quite convinced mid caps, small caps will outperform, but again there go for quality. Don't go for high debt companies. Those turnaround cases have got postponed, I think, a year more, unless we get liquidity in the second half of the year. At least the first 6 months are looking a washout for the high debt, high leverage companies.
Okay, Ajay, we'll leave it at that note. Appreciate you joining us today and taking us through your views, specifically in the NBFC space, which has been struggling with the ongoing liquidity crisis triggered last year with IL&FS fallout. But I think we're almost going to slip into the green. Nifty is around the mark of 11,900. Bank Nifty has recovered all its losses, just sitting with cuts of about 17 points. And while we were talking about Indiabulls Housing Finance seeing those intraday recovery of about 13 to 14%, you've got Lakshmi Vilas Bank also, which has gone up in trade after that news. Lakshmi Vilas Bank is now sitting with gains of about closer to 9%. So just when Indiabulls Housing went up, you also saw gains coming up for this stock. Let's bring in a technical expert on the show and get his views, what to do right now in the market. Abhijit Phatak of Definedge Solutions joins us on the show. Hi Abhijit, good afternoon. A sharp recovery is seen from the lower levels. Nifty managed to defend the 11,800 mark. Are you taking any fresh positions, or did you take any fresh positions at the lows of the day?
Yes, at the lows it was very clear that Nifty is going to turn based on the OI change in the Bank Nifty as well as Nifty. And looking at the broader market on a weekly chart, they are just range bound between 11,800 and 12,000. So only a breakout from either of this level will be a trend. Till then, you have to play the support and the resistance, buy near the support and book near the resistance. And same is with Bank Nifty, where the support is near 30,700 and 31,200 is the 31,200, 31,300 is the resistance. So you have to play this range till it breaks on one of the sides.
Abhijit, so if someone bought at the lows of the day today, they should hold on till the time Nifty touches 12,000, or it's appropriate to book profits considering the sort of moves that we've seen, or rather profit booking coming in at higher levels?
Yes, I expect at least 11,950 kind of levels sometime next week, because as I said, it might revisit that high of the week next week if you look at the weekly chart. So booking partially and carrying some positions might help.
Okay, book partial profits in case if you manage to take any long positions at the lows of the day. But Abhijit, in terms of stock-specific strategies for this afternoon, what are you recommending?
Two stocks. One stock is showing quite a bit of resilience in this so-called weak market. In the morning, it did not go down much. Tata Steel. In fact, I had given it on Thursday as well at 485. Today also, on any dip, it can be a buy in the next couple of days, maybe near 500. With a stop loss below 495, and I expect Tata Steel to go towards 520, 530 in the next maybe week or two. And another stock which might appear weak to some, but it has a very strong support, Reliance at near 1300, 1305. So as long as that is held, Reliance also I'm expecting it to go towards 1350, 1370 in the next couple of weeks.
Okay, so those stocks, you should keep them in the back of your mind, as you should keep Yes Bank and Indocin Bank, which have taken the sharp fall and are trading with steep cuts even right now. Shefali Malik is standing by to take us through what UBS says about Indocin Bank and Yes Bank. Shefali, suffice to say, one principal reason why the stocks are doing what they are doing today.
Absolutely. So I'll start with what the brokerage house is saying on Yes Bank. They've maintained their sell rating and have cut down the target price drastically to about 90 rupees versus about 170 earlier. And what they're saying in their report is that the expectation of a sharp turnaround is less likely to fructify. And currently they're not building in any capital raise considering the size of the issue that needs to happen for Yes Bank. And they're also going on to say that NPL risks seem higher than the current expectations going forward. The various metrics for the bank are expected to deteriorate significantly in FY20. So they expect ROE to remain below 10% till FY21, and they expect credit costs of about 255 to 200 basis points versus a much lesser guidance given by the management. So clearly they're not believing what the management is saying. They've also put out a note on Indocin Bank. The concerns are pretty much similar. They've downgraded it to a sell rating versus a neutral call earlier. They've cut the target price to about 1,400 versus about 1,700 rupees per share, so almost a 300 rupees cut. And they're saying that the credit cost could be higher at about 150 basis points versus just about 65 basis points guided by the management for FY20. Remember when the results came out, the management said that they have taken most of the pain, but they do not. UBS does not clearly think so, and it's also saying that lending to non-investment grade companies by Indocin Bank is much higher than expectations. The retail deposits as well as the percentage of external liabilities is lowest among some of the peers, and they're saying that the only thing that one of the things that is going positive for the bank is a proposed Bharat Financial merger that's expected to support the near-term earnings for the bank. So at 3 times price to book, the stock is trading near historical average price to book value, and clearly there is a risk of derating from here on, and that's why the downgrade to sell on unfavorable risk reward for the counter.
Okay, thanks a lot for that, Shefali. We'll watch out for these names. Abhijit, any thoughts here? Technically, Yes Bank, Indocin Bank?
Yes Bank is a complete no as far as any positional or even a delivery buy is concerned. It is very weak on long-term charts, and any pullback rise towards 130, 140 maybe because of the market conditions should be used to sell it. And I don't expect Yes Bank to rise even if the market rises, and I wouldn't be surprised if over the next 6 months Yes Bank touches 2 digits sometime.
Okay, that's the technical view coming in, and actually with the markets recovering, you've not seen any recovery coming in on both these stocks, be it Indocin Bank or also Yes Bank. And Bharat Financial, by the way, is also down nearly 5 to 6% in trade. That's trading around the levels of 930 right now. Remember, they've got NCLT approval for merger, Indocin Bank and Bharat Financial. So anytime you see a major movement in Indocin, probably it will be replicated for Bharat Financial as well. Let's bring in our next guest now. Nipun Mehta, market expert, joins us on the show now. Hi Nipun, good afternoon. What's been your prognosis on the markets right now? Should one look to deploy any fresh money? Because profit booking clearly there, but in terms of valuations now, is there any comfort that you're seeing?
So I think what the markets are showing is total sort of intolerance towards corporate governance issues, intolerance towards provisioning issues that are there. And that's where you're seeing clear distinction between valuations that are there for well-governed companies and companies where there have been question marks on either of governance or where auditors have resigned. I think that's clearly showing up in terms of valuation. So you're seeing one set of companies where valuations seem to be stretched, but our sense is the markets will continue to reward those companies. Their balance sheets are strong. Their valuations might be steep, but that's where probably the growth is something that you are likely to see over the next few quarters, both top line growth as well as margins or profitability that could be there. So while the markets, we've of course seen over the last several months now that the index is no clear indication of how overall the markets are moving. Simply because there are a few stocks which are taking the index up. So, which brings us to whether those other large caps which are sort of underperforming or mid caps which are underperforming is some place where investors could look at investing. So, our sense is, yes, there are those set of mid caps, some of those sectors where clearly there is a distinction again between the well-governed companies or better, stronger balance sheet companies. You can see that in autos, you can see that in cement, you can see that in real estate, NBFCs, private sector banks, where the clear distinction is happening. And that's where our sense is the opportunity lies, despite higher valuations for investing within the large cap and the mid cap space.
Okay. Let's also bring in Hadrien Mendonca of IIFL, who joins us on the show, and take his technical views also on the market. Hadrien, recovery from the lows of the day. Would you take any fresh position right now? What's the call on Nifty and on Bank Nifty?
Hi, good afternoon. Yes, definitely there has been a very strong recovery that we saw in the past one and a half hour. But the very important point here is that the 11,850, 11,870 support area that was very important for Nifty to defend. It has done it pretty well. So I think as long as the those levels of 11,850, 870 is held on to, I think one should be a little reluctant on going ahead and shorting the Nifty currently. As far as the Bank Nifty is concerned, on the 15-minute chart, we have actually witnessed a falling channel breakout already, and we have seen almost 200 points rally from here on. So taking a fresh call after a 200-point rally would be slightly difficult. I think this for the Nifty is this 300-point trading range that it has been stuck into over the past 3 weeks will continue to hold on, and I think only the one can go ahead and short the Nifty only if the 11,850 mark is broken convincingly on the closing basis.
Stock specific ideas for this afternoon, Hadrien?
Yeah, so both my ideas are on the long side. The first stock that we are bullish on is PFC. The stock is in a very, very solid upswing. It is maintaining its higher top, higher bottom structure. Secondly, today on the hourly chart, we are actually witnessing a flag pattern breakout after consolidation of 3 to 4 sessions. So I think this breakout, seems to be confirming on the hourly chart. So we'd consider going long on a PFC, keeping a stop loss at 130 and placing a target of 139. The second stock that we are bullish on is a Grasim. The stock has corrected pretty significantly, and after consolidating and not falling for the past 3 to 4 trading sessions, it is actually breaking out from a trading range. Also, it is finding support towards its very important 200-day moving average. So I think these parameters are indicating that we could see a short-term bounce in Grasim. So keeping a stop loss at 888, we are expecting a target of 912 on the upside on a Grasim.
Okay, those are some individual ideas coming in from Hadrien on technical basis. Nipun, you spoke about a lot of sectors where one can find value, but specifically if one were to look at the auto space where the numbers have been disappointing, be it the monthly sales numbers, and not only auto, actually take the auto anchors as well. The Q4 numbers have not been great. The monthly sales data is only indicating slowdown. But our interaction with a few managements have indicated maybe the demand environment in the second half of this fiscal year may improve. In light of that, if that was to happen, and in case if there is any sort of rural stimulus which comes in the budget, do you think now could be the right time, considering the valuations too have been suppressed, to invest into any of these stocks?
So if I'm going to look at both the two-wheeler and the four-wheeler space, and if it's going to be more of the rural spending, it's clearly more the two-wheeler space that's important, a lot more than the four-wheeler space, really. Probably the tractor space also does come in when one looks at rural spending that could potentially come by. Yes, our sense is that's something that in the second half could potentially change. Currently, what we're seeing is huge amount of pain in terms of huge inventories with dealers. We're seeing production cuts happening virtually all across. Exports to a degree suffering. So at least the June quarter is for sure to be fairly muted for this entire space. It's unlikely that you could see a very sharp uptick coming in the very short term, which means that even the September quarter need not necessarily be a sharp turnaround that could be there. It's probably from the December quarter that one could potentially see a turnaround in terms of volumes, in terms of sales coming in for the two-wheeler space. And of course, for the tractor space, it's more the peak season in terms of monsoons, and that's something that could help. But if I were to look at purely from the two-wheeler, four-wheeler space, yes, probably only the December quarter and the March quarter is something that could show an uptick depending on the kind of spending that happens in the rural space.
Nipun, fundamentally just wondering, what would you be doing with these two names on which UBS has expressed skepticism? It's an overarching answer, really. I'm not looking whether you will go out and buy Yes Bank at a particular price or an Indiabulls at a particular, or a Indocin Bank at a particular price, but they are raising skepticism about either the quantum of NPLs that might be there, or the credit cycle and the impact that might be there, or that all the data might not be completely known to the markets. Would you second that if you got a chance to hear what or read what UBS has said about both Indocin Bank and Yes Bank?
So one did see the report, Neeraj, also probably looked at balance sheets across the private banking space. Yes, in these two cases, clearly there is that concern that is there in terms of the asset quality yet showing up a little more pain that could be there. I think what's important is the fact that fundraising could be a challenge. Fundraising, particularly at a reasonable cost, could be a challenge for both of these banks. They are, in any case, open to downgrades that are there. Yes Bank already has been, is likely to get further downgraded. You could see that happening, maybe potentially, even as far as Indocin Bank is concerned, depending on what kind of announcements come by for provisioning. But yes, our sense is it's not just these two private sector banks that are there. Within the overall banking space, or stroke the housing finance space, there is still that potential pain that could come by unless liquidity issues are sorted out by the regulators in the short term. These could be essentially asset liability mismatches, but the point is that downgrades don't do or don't provide any help as far as fundraising is concerned for the issuers that are there. So yes, concern definitely likely to be there for not just for these two private sector banks, but potentially for other NBFCs as well.
Okay. Watch out for this pocket then is, I think, in a nutshell, what Nipun Mehta is trying to say. Nipun, so good having you. Thank you so much for taking the time out and being with us today. Really appreciate your time. That's a view from Nipun Mehta. Well, NBFCs notwithstanding, the market is trading flattish. The market breadth, though, not as strong. However, we're talking to companies which have done reasonably well in the fourth quarter. All through this week, we've done that. Today is no exception. And Orient Electric is one such company which has posted a steady set of earnings in the fourth quarter. FY19, it posted highest revenue growth of 26.9% in the lighting segment for the year FY19 when compared to its peers. Atul Jain of Orient Electric joins us right now to talk about how the quarter was and how do they see the business shaping up ahead as well. Atul, good having you. Thanks much for joining in. What brought about...
Thank you very much. Thanks for inviting me.
Firstly, congratulations on a strong quarter when you came out with the numbers. What prompted this performance in the lighting segment? And is this a sign of things to come?
So I think the both electrical consumer durables and the lighting segment experienced a reasonable amount of momentum and growth. I will talk more about the electrical consumer durable segment, which I look after. And in that segment, we had fairly robust growth, though we were impacted a bit by the winters, prolonged winters in certain parts of the country. And starting up of this quarter in April and May with heat waves coming across, we are seeing a strong momentum coming across the categories. So we are quite buoyant about this as a company that this should be helping us reach out to consumers with our smart offerings that we have done in the last few months, especially the smart ceiling fans, which we have launched, the AeroSlim, the IoT-enabled fans, which are being actually really appreciated by the consumers across the country.
Atul, I believe you've been handling the fan segment pretty closely for the company. Tell us, the last quarter saw delayed summer because of which performance was little bit impacted. So far, how's the summer season been for this space versus the last summer?
So this summer, we are seeing a very high replacement, which is happening across. The heat and the temperatures are such that consumers are looking for high-performing fans which have much better technology than what the earlier fans were offering. And we are seeing good, robust growth coming in primarily because of that. We are also seeing, for example, a good robustness in portable fans, especially in South India and some other parts of the country where the heat wave is very high. And portable fans with the latest concentric winding, which we have offered from our company, are becoming quite a success in these markets.
And what's the revenue share right now when you look at the overall revenue pie from the fans business?
So in the electrical consumers durables business, which includes our electric fans as well as appliances, we have reported a good growth of approximately, last year we grew about 16 to 17%. And in the fans business, only our market share estimated is approximately 20%. And we are estimating a good growth over that.
Okay, if one were to look at the entire FY19 performance, I believe the first 3 quarters were also good because of a restocking which took place. So keeping all those factors in mind, tell us what sort of revenue growth can one expect now moving ahead in FY20, and in terms of margins, can we see any acceleration going forward? Because now the thrust is more on the premium business. I think you guys launched some premium segment. On the premium side, there were some fans launched at the start of the year.
Yes, you are absolutely right. As I said, the consumers are now looking at how can they replace their fans with higher performing fans. And in that comes the premium segment, which has got not only higher air delivery, low sound, but also added convenient features like IoT enablement as well as underlight fans. These are the fans which are also helping us improve our margins. And these fans are also the ones which have, now they've started coming up with voice control. You can control them through Alexa or through the Google's Assistant. So these fans definitely help in increasing the revenue at a faster rate and also help improve the margins because consumers are willing to pay a certain amount of premiumness for the extra features and extra benefits that they get from the fans.
Okay, just before we thank you, Atul, any recent orders that the company has won? Because I believe there was some bit of stagnation due to the ongoing election period.
We did see a little bit of, as you said, stagnation in the month of May, early part of May especially. But I think now we being a mass distributed product, our distribution numbers are showing a robust growth and a healthy upswing which we are seeing compared to what we are seeing the quarter prior to this. So we are all quite gung-ho about this quarter and moving forward the business as a whole.
And what about the market share? What is it currently, and will it go higher in FY20?
See, I would expect the market share to go higher than what we were. The estimated market share, as we said, is about 20%. We are growing faster and we intend to grow faster than the industry, leading to increase in market share certainly.
Okay, Atul, we'll leave it at that note. I appreciate you joining us and taking us through how specifically the fan segment of the company has been doing. And remember, the company derives majority of its revenue from that segment. The markets right now are trading around the 11,900 mark as we speak. So there's been a sharp recovery from the lows of the day. Nifty is actually corrected nearly 80 points from the lows. We've defended the 11,800 mark on the downside. The bank Nifty is right now sitting with cuts of just about 35 points as we speak. And among the Nifty gainers, of course, topping the list is Indiabulls Housing after the clarification which came in. There was a huge recovery, in fact 13 to 14% higher from the intraday lows for Indiabulls Housing, currently sitting almost at days high levels of about 691. The other gainers are Z, Grasim, Bharti Airtel has gone up in trade, and from the banking pack you've got Kotak Mahindra Bank, which has seen some gains of about 1% to 1.5%. Okay, moving forward and talking about is the worst over for NPAs or not? Morgan Stanley doesn't think so. Anil Agarwal of Morgan Stanley believes that the banking system will see new NPAs, but they will not be as large as the ones formed 3 years ago. Listen into what he told Shafali Malik at the Morgan Stanley annual conference.
Really, there was a problem which started in September where funding just stopped for everybody. Funding costs went up. However, it's been 9 months since that day. So 2 or 3 things have happened is that RBI has actually infused quite a bit of liquidity since then. So if you look at the spreads over GSEC, etc., for the better run NBFCs or where market trusts the NBFCs, actually spreads have gone back to levels which existed in September. So there are certain players which are finding it tough to get funding, especially longer tenure funding. But for a large chunk of the people, they're actually getting funding. And you can look at the equity markets also. Equity market is differentiating between good and bad or weaker NBFCs. The way we think about it is that the total NBFC book in India, NBFC HFC book is about very roughly 25 trillion rupees. Of that, roughly 65 to 70% is what we call long vintage or strong parentage NBFCs. They're fine. Yeah. The problem is with the residual space where funding is a constraint. Not everything is finding it difficult, but generally funding is a constraint for them. And it will take time for that to be sorted out because they used to grow very aggressively. Now it's tough for them to grow. Yes. When you stop growing, you see some asset quality issues because in banking or financial lending, that's how it works. So they need to get out of this cycle. So I think it will take some time for them to get out of the problems that they are in.
So in couple of months, what's going to be the face of the sector? You think that the stronger ones will become stronger, like you said, and the weaker ones will be completely washed out?
I think stronger ones will keep becoming stronger. Okay. I don't know whether washout, what do you mean by washout? I think, let me put it this way, the weaker ones will keep getting weaker. And I don't think you will see a resolution in 2 months. I think it will take a longer time because entities just don't, it takes time for them to just keep getting weaker and weaker and weaker. So I think that the best way to look at it would be that the strong guys, the big guys versus the weaker guys, the divergence is just going to become exponentially large.
Okay. So the better ones, in terms of valuations as well, so you think that they might get even more expensive from here on? And in that perspective, do you think that they might see continuous buying from here on as well?
I mean, if they're delivering earnings, so there are two things. One is if there's an investor base who's looking at these stocks and they're like, okay, I can only buy these 9-10 stocks in the financial services space which are big and doing well, then obviously that will cause multiples to move up. So in fact, one of our views is that I think multiples for Indian financials, for the entities which people like, will move up simply because one is the weaker entities are not doing well, but more importantly from macro perspective, global rates are going down. You look at Fed futures, you look at oil prices, that's kind of come off, and you look at Indian interest rates, that's come off. So all those things are good for multiples. Yes, and generally all those things are good for a reflation trade, which is financials, but the problem in Indian financials is that a large chunk of the financials is something that investors don't want to own. So more and more of the money will probably move towards the same big, I don't know whether it's 5, 10, 15 names. So it depends, varies from investors to investor.
Coming to the banking space, so in the latest report that you've put out, you see about 30 to 50% upside for some of the large banks and about 25% core PPOP growth. So where is this growth going to come from, and what is the rationale behind your write-up?
Market share gain. Because what's happening is that loan growth in India is running at 11 to 12%. So I'm not saying that loan growth will go from 11, 12 to 18, 19 because unlikely, unless state-owned banks start growing. So if you have loan growth of 11 to 12% with a large chunk of the system just not able to lend because state-owned banks do not have the capital, and these NBFCs or smallest private bank which is under pressure, they can't lend, they don't have the capital to lend. So the big guys can actually just take away share. So our view is that the asset growth for them will be between 15 and 25, depending on the name we are talking about. And margins structurally should be on an uptrend because you can see the lending spreads moving up because if investors, their banks which are not lending, spreads are moving up. And second is that as bad loan book reduces, the percentage of total margins also expand. So they're seeing, I would expect, I mean, depending on the name, we are talking about 20 to 25% revenue growth, and costs are not going to grow by more than 15, 14%. So net, you end up with a pre-provision earnings growth of 25%, depending on, again, name, 22 to 25. I mean, there's literally nothing else in the region which is giving you that kind of pre-provision profit growth. So as I said, it's going to be, the big become bigger, both in the bank space and the NBFC space, and the weak will just keep getting weaker.
Okay.
Unless the break point or the turning inflection point could be if the economy starts just going ripping, which I don't think is the case right now.
Okay. And you think that with the GDP growth rate that we saw of about 5.8%, for these, it's going to be possible for these banks to deliver this kind of earnings growth?
Sure, that's what I'm not saying the system as a whole will give you that earnings growth. System as a whole will give you much weaker pre-provision profit growth.
Okay.
But for
it's
the big guys,
come to the bigger guys.
So there's some which is system growth. So if the system is growing at 11 to 12, you can say that they will grow their loan book at 11 to 12 just in line with system. But then you have another 3-4%, which means that the rest, because they are big and they're growing faster than the system, which means the rest will not grow at all.
Talking about the NPA cycle, most of the experts in the market are of the opinion that the worst is behind us. But is that really the case? Because in last couple of years, every few years down the line, we see some NPAs emerging. Right now also, we have so many names, ADAG, DHFL, etc., SL Group. all these names have emerged in last couple of months. So what's a guarantee that,
No, there's no guarantee. Obviously,
Yeah.
there's no guarantee. The only thing is what has happened is that the big lumpy exposures have been taken care of. And because when the government recapitalized the state-owned banks 2 years back, 2 years and 1 year back, they gave them enough capital to be able to recognize bad loans, make provisions on it, and move ahead. So once they did that, I think they are broadly okay. So a lot of the old loans have been taken out. Obviously, you'll keep seeing new additions.
Right.
The question is, how many new? Because what we were seeing in the last 5 years was the additions as a percentage of loan book every year was a dramatic number. And for some of the banks, it was running at 4 to 5% of loan book.
Yeah.
I don't think you are going to see that. Will there be new NPLs? Absolutely. It's a banking system.
Yeah.
So, that's what I was talking to. Like, you're seeing new names come up, but most of those are mid-cap except for the names that you talked about. So credit costs will remain elevated. But they're not going to be 300, 400 basis points of loans, which was running at, these banks were running with. Maybe it's 100, 150. That's still a big number. So we're not saying there will be no NPLs. There will be NPLs, but it will not be of the same magnitude that we saw in the last 3 years.
Okay. In terms of sectoral exposure, so you think that there is a huge risk coming in from some sectors, let's say agri or SMEs. Even in your note, you've mentioned that, the credit actually needs to start flowing to the MSMEs, because if all the banks start focusing on the, quality papers, who lends to the triple B minus below?
That's a big risk in my view. So what can cause another NPL cycle? Again, I don't think it will be of the same magnitude as what we saw, but an NPL cycle, a proper NPL cycle, would be the fact that nobody is lending to triple B and below.
Yeah.
Like all the guys who have capital are saying, okay, I want to lend in retail, and I want to lend to AA, AA, AAA. So if the system doesn't lend to triple B and double B, how do you have an economic growth without that? So, which means that you can have some problems there. So you need to have credit flowing to the lower rated corporates. Like if I start a company today, it won't be a AAA, it will be a triple B or whatever. So you need to be able to fund triple B and below. Otherwise it will be challenging. Because there is part of the economy which is getting credit, the part of the economy which is not getting credit.
Yeah. So SME guys, because they are the bottom of the ladder people. So if that's SME lending is a concern, so you think that at some point in time, even retail book may become a concern for
Possible. So I mean, again, India has been going through a very strong retail cycle for quite some time.
Yeah.
So I think, within retail also, what you have to think about is like everybody looks at retail and say, unsecured. Everybody's unsecured is not the same.
Yeah.
Like the big banks, when they're giving unsecured loans, they're giving it to their own depositors. The behavior is known. But the new NBFC, etc., the new guy who on the block, they have they don't have data. So their funding cost is significantly higher than the big bank. So if they are lending, they're obviously going down the economic strata and lending to people. Again, it may be okay, but the losses there will be higher than the losses at the big banks. So I think if the economy, if you see retail NPLs, I think it will again be at the kind of new generation NBFCs, etc., which is where you will see NPLs. We are not building in a retail loan cycle. I think that's 2 years away, but I think there will be a massive divergence in terms of who gets hit and who doesn't get hit.
Okay.
So I think the banks and the big guys will be fine. I don't think they have taken risk in retail lending.
Okay, so at least 2 years from now.
Yeah, and I think it will be more in the smaller guys.
Okay. So what are you advising your clients currently? What are your top bets at the moment?
Just own the big banks.
Big banks.
Big banks and big NBFC also we like, but big banks. Like the top 3, 4 big banks, I think they've done well in the last 1 year. We have been saying that for the last year. But I think the divergence will just continue.
All right, Anil. On that note, I'll wrap up this interview. Thank you so much for joining us.
Thank you.
Okay, that's the view coming in from Morgan Stanley on the banking space. They do expect the credit cost to stay at elevated levels, not 300 to 400 bips, but around 100 to 150 bips. Okay, before we get to the Fab 4 stocks, can we just pull up the intraday chart of Godrej Properties? That too has seen good gains. In fact, the stock's right now sitting with gains of about closer to 3% as we speak at 919. And Nifty is just about turned positive, just down about 1 point as we speak, but it did turn positive and it's recovered majority of the losses that we had seen. Let's see where the closing comes about. Also remember, this could be a function of the weekly options expiry day for both Nifty as well as Bank Nifty. Okay, let's find out which are the Fab 4 stocks that feature in Sharad Dubey's list. Let's go across to him. Hi Sharad, good afternoon.
Good afternoon. Good afternoon. So basically the first stock I picked up is SAIL, which is up almost 2%, its highest level seen in the last 3 trading sessions. After 14.3 lakh shares have been exchanged in a bulk deal. We don't know the details yet, but we'll tell you post market hours. Next stock is Tata Sponge Iron, which is up almost 2% after the board approved the rights issue shares of around 3.3 crores, aggregating to around 1650 odd crore rupees. The ratio is at around 15:7, and the issue price is set at around 500 odd rupees. The next stock we are having is Mishra Dhatu Nigam, which is up almost 2.8% after the company secured orders of around 197 odd crore rupees. The total current orders book stands at around 1900 crores right now. And the last stock of the day is Najin Chemicals, which is up almost 6.7% after hitting its all-time highs, and the stock has actually rallied 79% from its listings, and the volumes are trading almost 16 times its 20-day average. Back to you.
Well, thanks for that. So some stocks which are doing okay. On the large cap end, of course, it is, as the Morgan Stanley gentleman was saying, Anil was saying, it is the large lenders which seem to be doing well. The likes of HDFC Bank, Bajaj Finance, HDFC, Kotak Bank, and to an extent Axis Bank are the ones which are holding out. Yes Bank is down 13% now. Indocin Bank about 5.5%. Clear shift of money evident today. Anand Tandon, a man who's seen various such cycles, joins us right now. Anand, thanks so much for joining in. We're seeing this dichotomy today, and I think we've spoken about it thrice already on the show, but I can't get myself over it. I would want your opinion here, Anand. Would you believe, like Howard Marks' memo today says that it's all right to, give a premium to quality, but at some point of time, the ones which do not have the premium will come back and make money for the investor. In the Indian banking context, do you think that time is some time away?
In the Indian banking context, there is quality and then nothing else. So frankly, if there is a company which is not going up because it is perceived to be lack of quality, trust me, the earnings will follow the lack of quality. It's not as if it is going to become cheap because the earnings will come out. It will become cheap, it will become expensive because the earnings will vanish. So when it comes to lending money, I don't think you should compromise on quality at all. That said, there is still a question mark to be raised as to whether an 8 times book value or 9 times book value is justifiable. But that's a debate for another day. If you are looking to do financials, do not compromise on quality.
One thing is making a fresh investment, and you can debate what to do there. The other thing is somebody is holding on to some of these stocks because, well, maybe in the right wisdom or the wrong wisdom believed that a large portion of the correction was done, and is seeing these stocks getting battered another 5%, 13% or whatever the number might be. Would you recommend a switch, Anand?
Absolutely. I think there is no point in holding on to something which is moving down. Bad news tends to come in packs, as they say, there is never one cockroach. So therefore, when you are looking at something which is moving down, and especially in an industry where actually confidence, public confidence in particular, plays a large role, it is best not to test your luck too far. And besides, the other companies are already delivering. So it's not as if the frontline companies are doing badly either on business or even in terms of momentum stock prices. So why would you want to keep waiting for something to kind of bottom out and then hopefully turn around sometime in the future, especially when the raw material for this industry is raising money. And as I said, that's directly dependent on the confidence that the investors have in the company.
Okay. So Anand Tandon, as I said, a man who's seen various cycles, believes that it's best to even switch out at the current point of time as well from the losers into maybe the winners. Choose wisely and choose selectively. That's what people seem to be doing when it comes to real estate, and the chart of the day segment today suggests that India's largest mall developer has won over Analysts. The Bloomberg terminal shows 100% buy call from all the analysts tracking the stock right now. Sumit's here with the details. Sumit, but that's my question to you. This is not the first time that something like this has happened with companies. Why is it so special for Phoenix?
Because this company has remained analyst favorite at least for the last 3 years now. As you can see in this chart, India's largest mall developer, that is Phoenix Mills, has continued to remain analyst favorite bet for the 3rd straight year now. The mall developer is the only stock in India with 100% buy rating for the last 3 years among the Indian companies that are tracked by at least 10 analysts. Now, in the last 3-year period, the stock had a sell rating only once for a brief period of 3 months. But however, since then, the stock has never received any sell rating in the last 3 years. And if you see in the last 3 years, the share price of the company has gained over 100%. That compared to a 49% gain of the Nifty Realty Index, that is the benchmark for the real estate stock, and as Phoenix Mill is a part of the real estate index. Moreover, the stock is also expected to gain another 20% over the next 12 months, according to the analyst consensus target price, on the back of growing lease rentals and stable occupancy levels. The stock is expected to gain another 20% over the next 12 months.
Okay, Samit, thanks a lot for bringing that chart of the day. And moving on, NMDC's stock has recovered substantially from the day's low to trade with cuts of less than 2% right now after the miner managed to reopen 2 of its mines in Chhattisgarh. Nikki Mirchandani, who's been speaking to the management, joins us with more details on that. Nikki, over to you.
Well, NMDC has resumed the operation both in Bacheli and well as Kirandul mines, which are a part of the Beladila complex at Chhattisgarh, from where it gets almost 72% of its overall production volumes, at least that we've seen in FY19. This development comes after Chhattisgarh government has intervened and has helped NMDC resume back its operation. Overall, in the scheme of range events, the total production, if you look at the number, out of the 100%, you have 72% of your volumes coming in from Chhattisgarh mines and around 29% coming in from Karnataka. Now, within Chhattisgarh, 2 mines, Kirandul and Bacheli, these were the ones which were shut down for productions. And out of the 2, Kirandul contributed to around 32% of volumes, and the remaining 12.9 or 40% of the volumes came from Bacheli. Just to give a little background of what happened exactly, the protest first started at a Beladila deposit number 13. Now remember, it's a new production unit. It is yet to start contributing to NMDC's total productions from the start of this year. There was a protest there which extended to the existing mines in Chhattisgarh for the company, and the mining was suspended in Bacheli mines since June 11. The activity for Kirandul mines was suspended since June 7. So effectively from June 7 onwards to June 11th, we saw these mines being not so operational. Adani Enterprises has been the operator of these mines. What is the impact of this development? Though this development could have led to a potential impact of 72% of volumes, but then that's not the case right now because they have resumed the operation. But then the production loss, which is estimated for the mines in these 5 to 6 days of no activity, is to the tune of around 100 odd crore. Apart from that, the Beladila iron ore mine deposit 13, which is yet to completely get the production in 2019, that still remains suspended until further orders. Total mining capacity of Beladila deposit in a span of next 8 years is to the tune of around 10 million tons. So effectively, if this mine doesn't get any more further orders to reopen, then the loss could be to the extent of 10 million tons, but that over the period of 8 years effectively.
Okay, Nikki, thanks a lot for bringing in all those details. And clearly, as the stock price is reflecting, it has recovered from the lows, was somewhere about 100 rupees for NMDC, and now the stock's trading around the level of 106. Just want to address PC Jewelers, that's the stock which may come out of the F&O ban period for tomorrow's trade. The stock currently is sitting with just minor cuts, and it's off the day's low, by the way. If you look at the total open interest as a percentage of its market-wide position limit as of close yesterday was around 83%. For the stock to come out of the F&O ban, it has to fall below the 80%, and the data currently indicates that is inching very close to that mark of 80%. But just a caveat, the trends do change in the last 10 to 15 minutes of trade, but as of now it looks like PC Jewelers could be coming out of the F&O ban for tomorrow's trade. But let's move on. It's time to take a look at what the dealing rooms are recommending in trade. We've got Yatin Mehta and Darshan Mehta joining us with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, so Grasim is one of the stocks that's been spoken about today. Some of the large funds are actively accumulating Grasim. It's trading pretty much at the day's high. It's up almost 1.8%. So that's what's spoken about. The other counter which is up almost 4% the last time I checked was Syngene. Decent amount of buying on decent volumes today. It's up almost 5% 4% now. To almost 267,000 shares have already been traded on the counter. Some of the HNIs are actively accumulating. But on the other hand, the parent company Biocon is the one in which there is selling that's happening. Dealers and the analysts I spoke to do believe that, there is a lot of price cuts that happen in a lot of biosimilars across Europe. And probably that's the cause of concern on Biocon. Biocon is already trading at a fresh 52-week low. So there are a bit of concerns on Biocon. But Yatin, what are you hearing?
Darshan, talking about the entire NBFC space as well as banking space, that has seen some, respite in trade after hitting, multi-month lows and multi-year lows. Today, we are looking at bounce back in the NBFC and private banking space. Piramal Enterprise is also one of those stocks which has seen a good bounce back from the day's low. 2.5% down for that one, but dealers do expect some bit of short covering in all of these NBFCs. We have seen Indiabulls Housing as well as Shriram Transport, all of these NBFCs move up in trade. Piramal should catch up is what dealers are talking about at this point in time. Silver is this case with Indocin Bank. Dealers recommend a buy today, sell tomorrow kind of a strategy here. They do expect again, these private banks to bounce back, which have corrected significantly in trade today. So, a hope of a bounce as far as all of these stocks are concerned. And do watch out for the entire oil marketing pack. Oil has, firmed up today, but, the trend is slightly weaker. Dealers do indicate that domestic funds are buyer as far as the entire oil marketing pack is concerned. And HPCL is one of those stocks wherein dealers expect the uptrend to continue.
Okay, Darshan and Yatin, thanks a lot for joining with your dealing room checks. And as we speak, markets are at the high point of the day. Bank Nifty is, by the way, trading around the mark of 31,000, and Nifty is now firmly trading above the mark of 11,900. Let me just quickly go to our technical analyst and take their view. Hadrien, a huge sharp recovery is seen. What should be the tactical trade now?
Yeah, ideally, as I earlier mentioned, on the futures, as long as the 11,870, 11,875 mark is held on to, I think one should not go ahead and short the markets. So that means, it would be advisable to actually go long. You could expect another 80 to 90 points, up move from here on Nifty. So definitely the buy should be on the positive side.
I just want to mark Torrent Power that's sitting at day's high. Abhijit, come in here on the charts, and also it's in the futures and options market. Would you recommend taking any trade here on Torrent Power?
Sorry, Torrent Pharma or Torrent Power?
Torrent Power.
Power. Yeah, Torrent Power is looking good on the charts, and if it crosses 246, it can go towards 255. And it looks like a good long as of now with the stop loss below today's low.
Yeah, what is looking weak though is autos. For the third consecutive day, I reckon all the large cap auto names are under a bit of pressure. Abhijit, Phatak, is there a trade possible? A Tata Motors, Maruti, Hero, maybe even a Bajaj Auto? Which of the ones looks more vulnerable?
Actually, to be honest, all are weak on chart, but Tata Motors and Maruti both are sitting right at their supports, 6,800 and 163, 164. So if that breaks, then they can go down another maybe 3 to 5%. But I'm looking closely at 6,800 on the futures on Maruti and 163, 165 on Tata Motors. So that it's a bit difficult to take a overnight trade. So we'll have to see that tomorrow.
And Hadrien, it was a fantastic call day before yesterday on Indiabulls Housing Finance. It rode very well. Now that it's reversed, how do the charts suggest anything?
So, the move, the quantum of move that we saw today with that huge, pile of volume that we are seeing on the daily charts, I think we are actually witnessing a bullish engulfing pattern. Now, the reasons whatsoever it may be, but the charts are indicating that, a short-term bottom may be in place, provided we don't get to see or hear anything, rash about the company going forward. I think if we sustain around, the 680, 690 zone, I think we may see a little bit of extension of the current recovery that we've seen in Indiabulls. But it would be advisable to be very, very cautious, and because of the high volatility trades that we're witnessing in the stock, only brave hearts can go ahead and actually go long.
Yeah. Well, and a good call on Abbott India as well, Hadrien, so keep that up. But yeah, it's a market for the brave hearts if you are traded indeed, because look at the broader end of the spectrum. the names which are gaining as well, I don't think too many people would trade them. Indiabulls Ventures, Lakshmi Vilas Bank, Adani Transmission, Indiabulls Real Estate. It's quite stunning what's happening out here, really. The other pack which is all over the place is Zee Entertainment. Anand Tandon, you may know what's happening inside, you may not know what's happening inside, that's one thing. But just looking at the way this potential deal has now gone on, because I remember this was what, in October or November, when they first spoke about that letter wherein they said that we were sitting with our family for dinner thinking about what to do, etc., etc., etc. It's been what, 7-8 months that this has dragged on, with a suitor here, a suitor there, then the deal goes through, doesn't go through, etc., etc., etc. Somebody's holding on to those shares. What would you advise? What would you do if you were still holding on to the SL Group stocks currently?
Well, actually, the good thing about Zee is at least there is apparently nothing wrong with the business, right? The business continues to deliver fairly strong numbers. And even with the shift in pricing, etc., if you see, they've actually gained some market share, etc. So the business per se is quite robust. And therefore, if you were to imagine that the business can be sold to somebody who can take it forward, then there is absolutely this could be a good time to buy, because, it's quite likely that in stronger hands, it will actually move up from here. Now, the question really is whether whether there's enough time to sell the business. You have a couple of $1 billion deal. It's not going to be easy to find buyers, especially since, many of the buyers who could potentially be interested are either already in India or would kind of balk at that deal because they themselves have fairly strong brand names and don't necessarily need some of the stuff that Zee brings to the table. So I think in a time constraint kind of thing, there will always be an issue in terms of closing the deal within a fixed given time frame. But I think once the deal is done, you should see significant upside in the stock, at least for the near term. So I would suggest that at least for a holder of Zee, there is no particular reason why you should be panicking, unless of course the market itself takes a turn for the worse and mutual funds are forced to sell, in which case there will be a huge sell-off because most people are just holding off their sales as far as the mutual funds are concerned. And if that confidence were to break, obviously there is no bottom.
Okay, in fact, that's the reasoning that we've received from a lot of market experts. The stock price of Zee is suppressed because of the ongoing stake sale. Let's see at what price does the stake sale take place, because fundamentally things are still looking okay for this company. Okay, it's 3:20. Let's get your closing strategies then from our technical experts. Hadrien, let me come to you first. Any BTST or any STBT for tomorrow's session?
Yeah, I'll go with the BTST, and Bata India is a stock that I'm really impressed with. If you've noticed, markets have been very volatile, but Bata India has stuck to its ground and has actually not corrected at all. In fact, it has gained ground every time, in fact, day after day. So I think Bata India still has a lot of legs to move higher from here on. Given the stability that we are seeing in the counter currently, one can actually go long on a Bata India for a target of 1463, keeping a stop loss at 1424 on the downside.
What about you, Abhijit? Your closing strategy?
In fact, just I was 2 minutes back, I said Maruti I'm watching closely, and it has broken 6800 decisively on the futures. So that is a good STBT with a stop loss maybe 6820. And Tata Steel, which I had given earlier as a long, that also can be taken long. So one long and one short.
Okay. One long, one short. Just wanted to pull up Divan Housing, and it's just not now that the stock's fallen. Since the start of the day, the stock did see a gap down opening. It came out of the F&O ban. Last 3 days, the gain that you were seeing on the stock was on account of short covering. And today, since it is out of the F&O ban, it gives a room to the traders to create short positions. So 10% lower. Hadrien, if I could come to you on the downside now, what levels would you watch out in this stock?
Actually, the stock is constantly being correcting, and putting a number on on the downside is getting very difficult, because every support whatever we may have observed on the charts, given the historical events that we have seen, has the stock is not adhered to any support. So giving you a number on this point at this particular point is getting difficult. But I would still say that the 80 psychological round figure that is there can act as an important support going forward. Although I won't be surprised if even that is broken going forward.
Okay, well, for all you World Cup fans, some news, but the match has been delayed due to rain in Nottingham, so maybe post the market closes. If it starts, then at least we will be able to see a full match. Navneet, it promises to be a cracker of a game. Let's see if indeed there is one. Inspection, I think, as at 4 o'clock. So let's wait and watch what happens. We'll get some updates then. Anand, talking to Sudhin Choksi today, he was of the opinion that, of Grow Finance, he was of the opinion that any kind of recovery in real estate comes back with a lag, maybe as late as October 2020. And now, my question is, that's one way of looking at it. The other way to looking at it is through the prism of whether in a sector which is going through pain, would the quality ones stand out and gain in stock price performance as well? What's your sense?
Well, I think they already have. If you look at the frontline real estate companies or even the mall developer you were just mentioning a while back, they've actually done very well for themselves. One, because people need some exposure to the sector and therefore gravitate towards the ones that are likely to deliver good numbers. And two, because the execution generally is better simply because even the consumer goes and buys from companies that are more likely to deliver the product than those that are not. I think real estate will take a little more wild on the residential side because I think, builders are still finding it difficult to get the money now that RERA is in place in most places, and they are unable to, use the money from the sales immediately, at least as far as creating the project goes. On the commercial side, things look a little better. But there again, I think most of the companies are now going towards REITs. So the opportunity for investment, huge investment upside becomes a little more difficult to find because there are more debt-like instruments and therefore likely to be useful only for the patient investor. So I would think that, you are going to find a little more time before real estate really takes off.
Okay. Anand Tandon, always a pleasure chatting with you. Thanks much for being with us today and giving us your thoughts. Appreciate your time. A pleasure is ours. Let's start wrapping up the markets. Flat as flat can be for the large caps and the Nifty Bank. The mid caps may be a bit of red there, but the markets have bounced back from the lows of the day, which is probably not a bad sign from a bull's perspective. Let's tell you what's leading the gains and what's losing out. Indiabulls should be right up there, and it is about 11.5. Z Entertainment 2.5. BPCL a couple of percentage points. Kotak about 1.5%. Bajaj Finance 1.25%. So those are 4 or 5 names out there. Yes Bank 13% lower. It's ending virtually at the lowest point of the day, and this is not a good sign. Probably entails the stock will start off lower tomorrow as well, because you have a trending day on the downside and ending at the lowest point is never a good sign. Indocin Bank 4.5, Infosys 1.5%, Maruti and Tata Motors and Hero MotoCorp. So some of the auto names too have done that. Not as bad as Yes Bank, but certainly ending close to day's lows, which is never a good sign from a momentum stocks perspective. So let's wait and watch what happens tomorrow. Mid caps not as well behaved as the large caps, but enough and more stocks moving up as well, Navneet. Though one would have to say that the universe of stocks which are making those exaggerated moves is getting narrower and narrower.
The market breadth for the last few days has been in favor of the declines, but nevertheless, as Neeraj highlighted, there were a lot of movers also in today's trade. So let me start off with the gainers. Indiabulls Ventures and Indiabulls Real Estate are on top of my list, and the moves that you saw was primarily on back of the clarification which came from Indiabulls Housing, where the petitioner did withdraw the writ petition which was filed in the Supreme Court. So 5% higher for Indiabulls Real Estate, and good gains also seen for Ventures. Lakshmi Vilas Bank, now because of that, you also saw Lakshmi Vilas Bank recovering. That stock was locked into with gains of about 10%. Remember, this has gone up because of the merger that, of course, the approval is awaited, but because of the merger with Lakshmi Vilas Bank of Indiabulls Housing. Torrent Power was the other one of the top gainers also on the F&O side today. Saw some bit of long positions, and this one is closing around the day's high level. Motherson Sumi has rebounded quite sharply from the 52-week lows that were registered in the last week, and for this week now, the stock's seen good gains, and today also the stock was up about nearly 2%. Syngene International, the top gainer in the Nifty Midcap 100 index, 6.5% higher, also closing around the day's high mark. And the other gainer in that index was PI Industries. This one also registered gains of about closer to 4%, closing around the levels of 1142. On the losing side, Devan Housing was one of the top losers on the F&O side. The stock came out of the F&O ban today. It was up for the 3 days this week, but today's coming out of the F&O ban gave room to the traders to create short positions. Sterlite Tech, which went up after the news came in that the promoters have released the entire pledge, but once again today the stock came under pressure and that was down about 5% in trade. Bharat Financial, the downgrade that you got for Indocin Bank from UBS, this one also fell alongside. Both the companies have got NCLT approval for merger, so 4.5% lower. Jet Airways going into trade for trade segment from the next series, 17 to 16% lower here. PNB among the PSU banking lot was down today. That saw cuts of about nearly 3.5%. And a couple of other losers in the form of Kaveri Seeds on the future side. There were some positions being seen here as well. 4% lower, closing at day's low. And ICICI Prudential is the other stock which did see some bit of selling coming by. In fact, the stock's closing around the day's low mark with cuts of about 2.5%.
Not surprised with that one. Relative to the others, it had a actually weaker month of May. ICICI approved it. But let's bring up the final picture. Flat as flat can be for the Nifty Bank, the Sensex and the Nifty 2 ending very, very flat. So the rate's still just about closing off. If you can bring up the heat map and just see, because the markets are still functioning, and then we'll get onto the final parameters for what's happening to their different indices. But now it's quite staggering to see the kind of opposite ends at which Indiabulls Housing Finance and Yes Bank are closing the day with.
Yeah, Yes Bank, Indocin Bank, I think those were the stocks of the day on back of the downgrades that we saw from the brokerage house UBS. But in terms of participation, let's see how the turnover panned out. Remember, we've been highlighting how the turnover on the cash side has been on the lower side. There is lack of participation in the system. It has definitely picked up. I think this will be the highest figure for this week, 31,500. And the NSE F&O turnover today is Thursday on back of weekly options expiry date was expected to be on the higher side.
Yep, and the contributors list should come up, should have the private banks on one side, HDFC, Kotak, HDFC Bank, and Indiabulls Housing because of the stellar up move. No surprise that those are the winners. But the losers, interestingly, Yes Bank here, but Indocin Bank and Infosys in particular, a bit of a worrying sign. TCS nudging that 8.5 lakh crore market cap mark. Infosys quite the converse really. Reliance too contributing on the downside. But even Stevens for the gainers and the losers today. Anyways, final thoughts from our experts. Abhijit, we've discussed the large cap indices. How have the broader markets looked like? Do you see any kind of turnaround possibility based on the charts of either the mid cap or the small cap or the broader market indices?
No, I'm afraid that as long as Nifty is sideways, they might underperform, and unless Nifty breaks out about 12,000 on a closing basis decisively, the weaker stocks will get hammered, and that might continue for some more time.
Hadrien, would that be your view too?
Yeah, I think mid caps are finding it really difficult. If you've noticed, the Nifty mid cap index actually was showing was making an attempt 2 weeks back to break out from a falling trendline channel. But the index as an overall has actually failed to do that. So I think unless and until the mid cap index breaks above the 18,000 level and holds above the same, I don't think so we could see any kind of good action in terms of demand for the mid cap space. I think sticking to the large caps around these levels would be much more advisable.
Okay, Hadrien as well as Abhijit, we'll leave it at that note. Appreciate you guys joining us and taking us through the technical views on the markets. And with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj and my side and the entire team who's put the show together. Thanks a lot for watching, but don't go anywhere. Bloomberg Quint's Market Wrap comes up next.
Every once a while, there comes along a visionary who dedicates himself